On August 3rd, Bitget stopped accepting new registrations from residents of Japan. From November 1st, affected accounts will move into close-only mode. After December 31st, remaining open positions are scheduled to be closed by the platform, while the withdrawals are expected to remain available. This is not just another exchange restriction. It is a sign that one of the most persistent business models in Japan's crypto market is becoming much harder to sustain. Welcome to episode 93 of Japan Digital Asset Weekly by Wakyodo. For years, offshore exchanges could receive warnings from Japan's Financial Services Agency and still continue serving Japanese residents through websites and apps without establishing a licensed Japanese operation. That created a long-running gap between the law and what users could actually access. Binance showed one way that gap could close. After receiving reality warnings, Binance acquired Sakura Exchange Bitcoin, an already registered Japanese operator, in 2022. It launched Binance Japan in 2023, while Japanese residents lost access to the global platform. But many users didn't simply move to the domestic exchanges. They moved from Binance Global to other offshore platforms such as Bybit and Bitget, which offered more tokens, derivatives, and other products than licensed Japanese exchanges. Now that rule is narrowing. Bybit said it completed its remediation measures for Japanese residents on July 22nd. Its remaining functions are limited to withdrawals and conversion into Bitcoin, Ether, or USDC. Bitget is now following with a phased exit. Unregistered offshore exchanges have not completely disappeared from Japan. However, based on my experience observing this industry, the major platforms that Japanese users actually relied on as their main offshore exchanges are now largely gone as practical options. Why is this different from the earlier cycle of warnings? Because enforcement is no longer based on warnings alone. Regulatory notices, public identification of unregistered operators, restrictions on app distribution, stronger residence checks, and account-level controls by the exchanges themselves are now working together. In 2025, Bitget's app was removed from Apple's Japanese App Store. By 2026, Bybit and Bitget had moved from partial access restrictions to broad remediation or withdrawal. There's a real cost for users. Licensed Japanese exchanges generally offer fewer tokens and trading functions. Some experienced users may turn to DeFi, but that is not a risk-free substitute. They must manage private keys and evaluate smart contract, liquidity, and other risks themselves. At the same time, Japan's framework has demonstrated why local obligations matter. After the collapse of the global FTX group, FTX Japan customers were protected through segregation requirements and domestic asset holding measures. By April 25, 2025, customers had withdrawn approximately 5.5 billion yen in fiat currency and 22.5 billion yen in crypto assets. The issue is also fair competition. Licensed operators bear the cost of compliance, asset protection, and domestic supervision. If unregistered platforms can target the same customers while offering a wider product range without those obligations, compliant firms are placed at a structural disadvantage. Japan's recently passed financial markets reform will raise the risk further. The legislation moves crypto asset trading regulation into the Financial Instrument and Exchange Act framework. After the crypto provisions are implemented, which is expected during 2027, operating without registration can face stronger enforcement tools, including higher criminal penalties, emergency injunctions, and new civil consequences for certain sales. For global firms, the message is straightforward. Japan is no longer a market where you can add Japanese language support to a global product and acquire users without building a local strategy. Market entry must be designed as a separate project covering regulation, product scope, partners, brand building, and customer acquisition. The answer may be an acquisition, a partnership with a registered operator, B2B technology or liquidity provision, or a phased entry with a limited product. Bitget's exit is not simply the departure of one company. It marks the end of an era in which major offshore exchanges could access Japanese customers without taking responsibility inside Japan. If your company is evaluating in Japan, Wakyodo helps global digital asset firms understand the market, identify potential partners, and determine the right entry approach. Contact us through our website to discuss your plans. Thank you for watching, and see you next Monday.